Everyone's screaming about Nvidia and Tesla, but the smartest money just changed the map. If you're still hunting the biggest names for 2026 gains, you could be buying yesterday's winners. Today, I'm going to show you the 5 stocks that actually matter for the next 12 months, and which 2 you should only watch, not own. Here's why this matters right now. The Federal Reserve has just updated its projections, and the market is actively pricing a pivot. That pivot changes which companies win in 2026, not because of headlines, but because the economics of growth, lending, and data centers fundamentally shift. If you want real alpha next year, you have to think infrastructure, monetization, and rate sensitivity, not hype. Let's start with the 2 stocks everyone is watching. Nvidia is the king of AI chips. There's no debate there. Its hardware and software ecosystem dominates modern AI workloads, but dominance is exactly why the trade has become crowded. Big players are actively working on alternatives, custom silicon, internal accelerators, and software portability that reduces long-term dependency. That's not speculation, that's strategy. Nvidia hasn't broken, but expectations are now extreme. At this stage, Nvidia is more useful as a market signal than as a fresh, asymmetric bet. Tesla tells a similar story. It still drives attention and emotion. Robotaxi headlines keep resurfacing, but regulatory pressure, legal rulings around autopilot, and execution timelines remain unresolved. Tesla matters for sentiment and volatility. But unless you're prepared for massive swings, it's not the foundation you want for a 2026 focused portfolio. So here's the framework. Nvidia and Tesla matter, but as indicators, as temperature checks, not as the core of the next cycle. Now, let's talk about where smart money is actually positioning. First, Vertiv. Everyone talks about AI chips. Almost no one talks about heat. AI data centers are dense, power-hungry, and extremely difficult to cool. As workloads scale, cooling and power infrastructure become mission-critical. This is where Vertiv quietly wins. Vertiv doesn't compete with Nvidia. It enables Nvidia and every other AI platform. Vertiv provides power distribution, thermal management, and liquid cooling systems that hyperscalers cannot operate without. Before a single AI chip generates revenue, infrastructure contracts are already signed. This is the classic picks on shovels play. Even if margins compress upstream, infrastructure still gets paid. Vertiv has been expanding its liquid cooling offerings and securing long-term relationships tied directly to hyperscale expansion. It's not flashy, it's not viral, but it's necessary. And necessary businesses tend to compound quietly. The risk is timing. Permitting delays, power availability, and construction bottlenecks can shift revenue forward or backward. That's why backlog and contract announcements matter far more than daily price action. Next, Applovin. This is where AI actually turns into money. While headlines focus on chatbots and model launches, Applovin has built an AI-driven advertising engine that monetizes attention in real time. Its recent earnings growth wasn't fueled by hype. It was driven by improved targeting, efficiency, and margin expansion. Applovin sits at the intersection of software, AI, and cash flow. It doesn't promise the future, it delivers revenue now. That's exactly the type of company markets reward when investors rotate away from speculation and toward proven monetization. The risk here is competition and regulation in ad tech. That pressure is real, but as long as revenue growth and margins hold, execution beats fear. Watch guidance closely. If expectations rise and margins stay intact, institutions stay interested. Now, the sleeper and the most misunderstood name on this list, SoFi FinTech struggled in a high-rate environment. Lending margins tightened, risk rose, and valuations compressed. That's exactly why SoFi becomes interesting as the cycle turns. SoFi isn't just an app. It's a digital financial ecosystem built for the next generation. When rates fall, refinancing activity increases, borrowing picks up, and platform-based lenders regain operating leverage. SoFi sits directly in that path. This is not a hype trade. This is a rate cycle trade. If the Fed follows through with easing into 2026, SoFi's lending and financial services segments benefit disproportionately. But that leverage cuts both ways. If rate cuts are delayed or credit quality worsens, SoFi reacts fast. This is a position sizing decision, not a blind bet. Watch Fed language, deposit growth, and credit trends. Those are your signals. Now connect the dots The 2026 market will not reward the loudest narratives. It will reward the companies underneath the system, the infrastructure providers, the monetizers, and the platforms that benefit when financial conditions normalize. NVIDIA and Tesla still matter, but mainly as barometers. Vertiv benefits from AI regardless of which chip wins. AppLovin benefits from AI regardless of which model dominates. SoFi benefits from rate normalization, regardless of which headline grabs attention. That's positioning. Here's the contrarian truth. When everyone starts yelling AI bubble, institutions don't abandon AI. They rotate into the layers that get paid quietly and consistently. That's where durable returns tend to hide. If there's one invisible winner most investors overlook going into 2026, it's Vertiv. Not because it's exciting, but because it's essential. And essential businesses often outperform when hype fades. So here are the takeaways. Use NVIDIA and Tesla as sentiment gauges, not portfolio anchors. Focus on infrastructure and monetization for durability. And if you believe the rate cycle turns in 2026, SoFi becomes a lever, but only if you size it intelligently. I'm not a financial advisor. This content is for education and idea generation only. Markets involve risk, and every investor's situation is different. Always do your own research and manage exposure responsibly. If this helped you think more clearly about the 2026 shift, subscribe and turn on notifications. I don't post noise. I only post when the data changes. Comment list below, and I'll pin my full watch list with the key entry zones I'm watching. If this saved you a few hours of research today, you know what to do. Markets change. Winners are often the boring, necessary companies that get paid regardless of headlines. Be smart, size positions properly, and don't buy the news, buy the business. I'll see you in the next update.